Good morning, traders. It is Friday, the 25th of July, 2025. It's 8 a.m. Chicago time. This is episode number 2670. Quick mic check. Just let me know how the sound is coming through to you. Uh, Please remember that derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. So let's just go right into the pre-market summary sheet here from Convergent Trading. For more details, of course, go to convergenttrading.com. The Your eyes should go right into the risk posture right up here. We have a mixed risk posture. The market's stable, so to speak, holding steady. You can see the S&P is almost unchanged. So is the NASDAQ. The Russell has been, of course, on a tear, has been quite active lately. But overall, the range of volume is quite low for the U.S. equity market, equity index market. So this is not what we'd want to see coming into Friday, especially since we had, durable goods, which is considered a higher tier number. There's a little bit more activity in terms of range and relative volume. Remember, relative volume here is this moment in time, this minute, or this 15-minute bracket that we're in, compared to the average of this 15-minute bracket, how much volume and how much range we've had over the last 20 sessions. That's what this is. That's what this is describing. Crude is popping a little bit higher. We'll talk about crude a fair bit, but the action is really in the currencies. And we got the Bund here still moving around since yesterday's ECB announcement, holding rates steady. And then we have movement in the cable and the yen. And of course, cryptos are getting a lot of attention. Remember, ETH at some point this year, ETH on the year is up about 2 to 4% for the year. But actually, ETH has gone down as far as 1,300. So it dropped from about 3720 to about 1,300 and has come back and it has tripled in value since April-ish, I think. So it looks like it hasn't moved much this year, but ETH has really had a banner year. In terms of earnings, we have Centene Charter Communications before the open. And then we don't have much after the close. We have Phillips 66 Energy intraday. UK retail sales lower than expected. German IFO lower than expected. US durable goods higher than expected. Durable goods, however, the previous was 16.5%. Today came in at negative 9.3. That's quite a swing. The expectation was much worse at negative 10.8. This is the tariff effect. U.S. President Trump's he had a productive meeting with Fed's Chair Powell. Although the videos that I watched looked so contentious, he had a productive meeting with Fed's Chair Powell. There was a lot on the feed today stating that there was really no intention that Trump would remove or replace Powell, which he doesn't have the power to do unless there is fraud. And so it's just a bunch of noise on that. I'm not going to go through this line by line. The main thing I want to point out is for the S&P, which we're using that as a barometer across the indices, although volume in the NASDAQ or the micros is much higher now than the S&P. We have a multi-distribution profile this morning, creating a bit of a B shape. We checked higher and came right back in. Volume is just very, very poor. Very, very poor so far. 89,000 contracts for the S&P. It's very, very low. The inventory is 99% long, meaning 99% of the volume so far occurred above yesterday's close. The range is 20 and a quarter, which is in line with the first standard deviation of what we'd consider normal, but unfortunately, it is actually pretty low compared to the last 20 sessions. As you could see, the range in RN under next to the S&P is only at 68%. So looking kind of sleepy. This is your typical sleepy, low vol bull run that we have going on here today. So the next thing I wanted to cover with you is a quick look, because I do like to go back and compare what the plans were for the session, the scenarios. This was posted on, let's see if we can maximize this F11. This is what I posted in the CT Market Prep Discord channel for members, stating that the over-under for the session yesterday was the 95 to 04. And that's basically where we were opening, and this zone needed to be breached for any real move away, for a very quick move away from here. So it's just not it isn't, to me, it looked very slow. The overall bias is to the upside on the open, but it would have to break through. As you could see, scenario one has to break through this low. Let me see if I can get a better pen here. Actually, let's just switch. Boop. Yep. So it would have to break through this zone here to have any imbalance come in at the open. It was quite balanced. The primary scenario is a test up, come back into the range, and potentially, because it's new all-time highs on a gap up, the expectation is it's likely to push down like it's done. It ended up playing nothing really. It ended up playing all scenarios yesterday, and was a relatively boring trade, in my opinion. But let's go back for crude. Crude played out much better. Crude was on its way down. The over-under zone in crude was 65.70 to 66 even. And the primary expectation for crude is that we would struggle to push higher after those overnight spikes. You could see there excess highs in crude in the overnight session yesterday. And the idea is we would come back into the zone and fall right off. And I'll show you what actually happened right here. Here's what happened yesterday. I left these zones where they are. And this is, the primary scenario for a call is a push up into the 64. What did I put out? 64.13 or so. And then I was looking for it to break through this range and come back and be responsive, close the naked point of control, close the prior settle, and kind of sit in the range here to base for the next leg up. It did not do that yesterday. It was just an overlapping mess. Today's zone is right up here in the 64.13, which I expected yesterday to be a top. I expected that area to be a top around 64.13, 14. We're in that zone here now, and I created a new zone, so I'll take this away. And so now the S&P has somewhat of a, I'm not seeing a good excess high here. This is one of those situations where if we had an excess high like we saw, in the prior session, I would be more confident in our ability to stay below. This has traded. You could see it created a high volume node there, and that's to me there. It's indicating some acceptance. The profiles, the double distribution profile with a low volume node right there at the top of the range. This is our key over under range. This is going to be our kind of weather vane or our guide as to what the bias will be. It happens to have the overnight point of control. At the bottom of it, it happens to have the overnight DGPs or day generated prices. Those are the VWAP, full session mid. It happens to have those at the top. So I'm pretty comfortable with this zone here. And the expectation for today, let's get our colors going. The expectation for today is here we are. We have settlement down here. We have yesterday's range right there. We have the point of control of yesterday right there. We have the overnight point of control overlapping. So this seems to have successfully tested the all-time high put in yesterday for a quick liquidity check, and it fell right off and through the low volume node at the high, the DGPs, the full session mid, full session VWAP. So we're talking about context here. The story I'm telling you is context. You would expect it to pull back, consolidate, and squeeze shorts back for new highs. It did not do that. Instead, it broke down and it's testing the range. So my bias is somewhat short. The overall inventory, overnight inventory, is 99% long. Remember, we're opening inside of yesterday's range. So there's that historical probability for the prior settle, which is around 75% or so. And so my primary play is for this thing to balance out. We do have a higher low here on the overnight, balance out, retest full session mid, full session VWAP into our over under zone, fall back through, get the prior settle, and then get the overnight stat as well. Hit those stats together, and then potentially push through to the downside, consolidate. I'm not expecting it to move too far. The problem here is we're coming into the weekend. We tend to balance the week on the Friday. So if you look at last Friday, it tended to push down to balance things off. But the expectation here, I do expect some of that to happen, but I'm not being aggressive. The vol on this product, the volatility, the close-to-close volatility on this product has fallen dramatically, and so my expectations are relatively tempered. Okay. Okay, so that's the primary scenario. The secondary scenario on here, I'm not going to do a tertiary or a third. The secondary scenario is we do get the pushback, we get the rebalance of the overnight inventory, we take out the overnight low, we take out the prior settle, we test, and then we have a short squeeze. So what does that look like? It looks like a strong push down, a pull up, consolidation, and then it starts to break higher on a higher low versus pulling back into the bottom of the zone and continuing. So I'm looking for that. Now, we have to be careful here because, I'm sure a lot of you are new here to this, have not heard the TraderBite before or whatever, but I started these in 2012. Our goal here is not to project or predict what the market is doing. Our goal is to form different scenarios, visualize different scenarios so that when one of them shows up, we just act. It's familiar. Coming in without any scenarios like I see a lot of people do, right? They have, a 4-hour chart and a 1-minute chart or a 500 tick or something like that. And they're just kind of flowing with it. It doesn't, I guess that works for some people, but what it doesn't do is it doesn't force you to look at what has it done on the composite, on the daily, what has it done or on the weekly, what has it done on the daily, what are the key areas, what did it do for the week, what day of the week is it, to think through the whole picture. And that's what we're after here. We're looking to put together the full picture so that when we come in, we're relatively confident and we know what we're leaning against. You notice I'm bouncing here against this stock zone. I'm leaning against DGPs. I'm paying attention to where the points of control are, prior highs and lows. I'm not a price action only trader. I'm looking at the auction. I'm looking at macro. I'm looking at the auction. I'm looking at price action, and I'm triggering on order flow. So I'm spanning the whole thing. And this is backed by 25 years of trading and following the same process since 2005. I have not had to change how I trade since 2005. Whereas if you've been around and watched YouTube videos, there's just some different thing happening every once in a while, a new tool that somebody's promoting on their channel, so that becomes their thing. I don't do that. So I'm sticking to this process. I'm looking for this thing to battle this over under zone. I'm looking for it to battle the DGPs. And then if it does successfully get through, then we're looking for it to tackle the yesterday's overnight high to test that. But ultimately, I'm expecting it to fail to hold up against the all-time highs on a Friday afternoon, especially when it's the last Friday, right? So next week we have the end of month, and we have some key numbers coming into next week. By the way, next week on Thursday I leave for 2 weeks, so there will not be a Trader Bite for 2 weeks. For Convergent members, I'll continue to do the best I can to do to provide the morning prep, but there will not be videos after Wednesday. There will not be videos until August 15th. Okay, so that's ES. Now let's take a look at crude. We looked at crude on the other. What's going on here? We looked at crude on the other chart, and crude, if you recall this chart here, crude, those were the scenarios. Scenario one, push back into this over under zone, fail down into the prior settle, or push through the over under zone and push higher. Here's what actually happened in crude. Crude ended up doing both. Crude turned down, pushed through the over under zone, and pushed down into the prior range, touched the prior range, the prior high a day by a couple of ticks, and then exploded to the other side and finished near highs. So yesterday in crude, we had scenario 1 and 2. Today in crude, if you look at what's happening here, look at how it made the high cleanly, but the pullback is so overlapping. These are 30-minute bars, and look at how much overlap there is on these 30-minute bars. It's really struggling in both directions. My bias in crude, for those of you who are members in Convergent and saw my homework, my bias in crude has been to go higher since the low was put in a couple days ago. Since this day here, so we have an over-under, a key over-under stock zone right here in crude. It tested it, could not hold it. And then once this day ended right here, my bias was long crude. So if I were a swing trader, I would be long crude. It held, it turned around, and then finally it squeezed the shorts. It retested yesterday and has come up. Crude is firmly bullish, in my opinion. So this morning, why doesn't this work? So this morning, my expectation is right here, this zone, this battle right here, I'm expecting it to try to poke through, but hold. So crude primary scenario, we're right here, it's open. I'm expecting it to try to push through this zone and then squeeze the overnight high and then continue to push through. These are single prints, so this is poor structure that is likely to be repaired. So this orange zone is singles. I'm expecting it to kind of push through. I'm expecting a two-way fight, however, in crude, because they're just not giving up on the downside. They're really making the buyers fight for it in crude. The secondary scenario is it pushes down, tries to come up, puts in a lower high to the overnight, and then finally breaks through. This is the better trade, and that opens up a run right back into this 65.80, 65.70 area for a return and a balance right in the middle of the yesterday's range. So we essentially put in a higher low, higher high in crude, but really we're doing it in a very difficult, balanced way. Okay, look at the relative delta. Relative delta in ES down, in NQ down, in crude down, and then it's kind of rebalanced here a little bit on the open. And so overall, uh, I'm expecting this thing to push down on the open. I'm expecting the aggressors to continue to be on the sell side. But again, I'm looking for this thing to struggle on its way down uh, across the board. ES, NQ, crude, same story, all bullish. Okay, I'll leave you with that. Good luck. For those of you who attended the Wednesday AMA, thank you for being there. If you have not watched it, I've included the link in the description of this YouTube video. There was a lot shared there, some really good questions. We talked about funding evaluation programs, funded traders versus self-funded traders trading live. We answered a lot of questions. We provided some detail and a reasonable plan on how to take advantage of funded programs versus when you should trade your own account. You might want to watch that. Take a look inside of the description or the description piece of this video, and you'll find a link to go catch that. There were a lot of good questions answered. Good luck. I'll catch you on Monday. Take care.